Good evening and welcome to tonight's webinar here on invested.dk. First of all, I would like to ask if you can hear me. If you can write in the question box in the right side, and this is also the place where you can ask questions during the webinar. And the thing is that we're going to meet a lot of people here tonight. We have more than 2,000 people that registered for this webinar. So I can assure you that unfortunately not all of you can get an answer to your questions tonight. So what we're going to do is that we're going to have a presentation about half an hour, and then after that maybe 20 minutes of questions. Something like that, I think. And first of all, I want to say a few things about the investment club that you actually have visited tonight, which is called invested.dk. We're doing courses in Danish and in English, and we're doing webinars like this that we're having tonight. We are traders ourselves and investors ourselves. We trade on eToro too, and we're having a lot of fun doing that, and this is just our passion doing this, and we want to democratize investing and trading so that ordinary people can actually handle their own funds and don't have to leave it to the banks to make them profits in their investments. And tonight we actually have the perfect presenter to tell us more about this, because we are going to have a presentation by Kieron Wilkinson, who is actually one of the most popular investors on eToro, which means that on eToro you can actually follow Kieron, which is something that 27,000 people have chosen to do, and 4,000 people are copying his trades one-to-one, which means that every time he takes a trade, you can actually take the same trade as him. And this is something that a lot of people have chosen to do, and the reason for this is obviously because Kieron is investing and trading with very good results. As you can see, this year, even during the Corona crisis, he had profits of 33%. Last year was 55%, and with a reasonable risk score. So this makes it for me very interesting to understand what Kieron is actually doing, because he's obviously doing much better than most people. And another thing I would like to say is that there's going to be a recording of this. I can see that someone asked about this, so I'm happy to say that for those of you that are maybe not able to see the whole webinar, we're going to record this and we'll send out an email probably tomorrow with the whole recording. And with these words, I would actually like to give the microphone to Kieron, because I think that he is much better at presenting himself to you. So I'm going to give the microphone and the floor to you, Kieron.
Thank you. Thank you for that introduction, and a big welcome to everyone who has come to watch this webinar tonight. It's my pleasure to be talking to you. So the title of the seminar is Find the Right Stocks at the Right Prices. So my goal today is to help you to understand a bit more about the fundamentals of some very important stocks in my portfolio. And I'll also try and encourage you to copy me, if that's okay. So if you want to follow me on LinkedIn or eToro or Twitter, you can find my details there on the first page. And let's carry on. So firstly, I'll give you a little bit of information about me, some general background and why I'm so interested in trading myself. And then I'll give you a brief introduction to copy trading itself and how this works in eToro and how you can get involved if you would like. It's very straightforward, but we'll cover that a bit later on. And then I'll talk to you about my strategy in particular and the techniques I implement to be successful at trading. And as you can see, I have managed to generate some good returns over the last couple of years, and I hope that I can share some of that insight with you. So my fundamental strategy is value investing. I'm sure a lot of you will have heard of this, but I'll hopefully give you a little bit more information on that today. And also the point I really want to get across is that these numbers that we often see in value investing are really just the surface. There's a lot more beyond that that I want to share with you, and how you can do this to really get a good picture of a stock and how it performs. And two important examples of this are Tesla and Nvidia. And I want to share with you my reasoning behind entering positions in both of these companies. And finally, I want to talk about how you can time that entry point exactly right to maximize your profit in these trades. And this combines both fundamental and technical analysis. So a little bit about me. In 2017, I finished a master's degree in theoretical physics in the UK. I then started a PhD in computer science, and at the moment I'm just coming to the end of this PhD. And my speciality is in quantum information theory. So in the last 3 years, and even before that, I've been very interested in mathematics and also technology. And I like to think that I've put those two to good use in my trading strategy. So I started investing on eToro about 3 years ago. I was actually copying other people at the start, and also buying some individual stocks, just some things that caught my eye, but not really a trading strategy as such. But over time, I was able to refine that strategy and really start to dig deep into the fundamental analysis. And I managed to create my own strategy and became a popular investor in February. And since then, I've built up a community of copyiers, and I like to talk to them all the time, share my thoughts, and generate them some nice profits. So what exactly is copy trading on eToro? Some of you here might already be familiar with this, but a lot of you might not. So I thought I'd share a quick overview. So fundamentally, how this works is you put your money into a successful trader on eToro, and whenever they make a trade, it's automatically copied on your account. So if they're doing well and generating good results, these results can be passed on to you. And when you do this, there are no management fees and no commission on any returns that you make. You don't have to pay the traders because they earn a monthly fee on on the money that you have invested in them. And one of the best features, in my opinion, is that this creates a very social environment. So everyone is involved in discussions, we share new ideas, and we can frequently comment on each other's posts. And another great thing is that you don't have to be an experienced trader to do this. You don't even have to know how to invest in the stock market. All you have to do is trust someone to manage your money, and they can generate you good returns. So this is my history on eToro. If you would like to copy me, you can follow the link below. To date, in my 12-month return is 77%. I'm very proud of this. Particularly during the COVID-19 pandemic, I was delighted with my results. And I was delighted that I managed to return a large profit to my copyiers. A lot of people ask me how exactly I managed to generate this return during the COVID-19 pandemic. And how I did it was by trading volatility, this exchange traded notes, VXX. So how this works is it tracks the futures in the S&P 500, the main US index. And when this index is showing signs of a drop, we see huge returns in VXX. So it's often used as a hedge. And to be honest, when I opened this trade, I did have a hedge in mind, but it quickly became clear to me that the market crash was only just beginning at that point. So I kept my position open. as I knew that it could become a lot more profitable, and I was luckily correct in that situation. But a little word of advice, if you aren't completely familiar with this exchange traded note, I recommend doing a lot of reading if you want to trade it, as it is a bit risky. There's a lot of mathematical background there, so just be careful. So my strategy, the core idea in my strategy is value investing. I like to do a full background analysis of all of the stocks that I invest in. But sometimes, depending on the market conditions, I will open a shorter term swing trade in some companies. So what exactly is value investing? Some of you might already be familiar with this, but let's cover some of these key ideas. So the key question in value investing is, what is the intrinsic value of a given stock? And some of the most common metrics that you may have heard of are the price to earnings ratio, the debt to equity ratio, and the free cash flow. These are just some of the metrics which are used commonly. But if you look up value investing on the internet to get more information, you may notice that there isn't really a lot of information outside of these purely numerical data. One thing that isn't really mentioned is an analysis of how exactly the business model of a company is working and how it's growing and standing the test of time, and all of the things that are changing in the economy. So my goal in this webinar is to explain to you how this can be even more important than these key metrics. In fact, it can actually be the driving force behind these metrics. So I think this is really a fundamental thing which is very useful to understand and analyze. Unfortunately, there are some limitations with value investing that can't really be avoided. So I'm sure that stock prices, in an ideal world, they would trade at exactly their fair value, but this is rarely, if ever, the case. The stock value can be inflated hugely, as we could argue is the case at the moment after the COVID-19 pandemic, but I'll give you a little bit more information on that later. Another problem is that there's so many different variables to consider. Actually combining all of this information is a very difficult task, and we have to understand that it's never an exact science to get this right. We have to just try and reduce the error as much as we can and get a good estimate. And another problem is that the value of your investment, even if you pick a very good investment in a company, that value could go down if something happens in the market. But in that situation, what's key is to hold on to your position, as it will come back over time. So patience is really key here. So now I want to give two examples of companies where that real fundamental analysis beyond the numbers is very important. First one is Tesla, and the second is Nvidia. So starting with Tesla, this is what the stock price has done over the last year. You can see that it's had a very, very good year until quite recently, but it's still up a huge amount since the start of 2020. So congratulations if you do own some Tesla shares. So if you do follow Tesla news, you may have seen a lot of headlines such as these. We have Tesla becomes the world's most valuable car maker without making any profit. Tesla is the most valuable car company on earth. Tesla overtakes Toyota to become the world's most valuable car maker. And when I saw these headlines, I thought, why are we just focusing on Tesla's ability to make good cars? This isn't the entire business model. We have, beyond this, the battery technology and research, which is ongoing all of the time in a huge area of Tesla's business model. We also have the self-driving technology, which is getting better every day. We have the supercharging network, and we also have Tesla's contributions to the energy sector, the solar roof, the solar battery, and its massive energy storage projects. So this is a plot of Tesla's revenue over the last 5 years. We can see that obviously the automotive sales revenue is the main contributor to these results. The other sectors are at the moment small, but if we remove the automotive revenue share and focus on the others, we can see a very promising trend over time. So all of these smaller segments are growing over time at a strong rate, especially the services revenue. We can see that it has taken a little bit of a hit due to the COVID-19 crisis, but overall, this is very strong results. And to me, this is an indication that Tesla is branching out and it's growing its business model to adapt to a changing environment. So I want to focus on one part of the business model in particular, which I find very promising from Tesla and that I think everyone should know about. And that is the supercharger model. So every time someone who owns a Tesla charges their car at a supercharger, Tesla earns a little bit of profit on that after we subtract the fees for the electricity. Now, Tesla is in full control of how much they charge for this, for the use of their superchargers, but by keeping the price low, their profit margins low, they can encourage people to use that facility, and they can also incentivize people to buy an electric car as long as they keep that cost below the cost of fuel. Now, any profit for Tesla is good profit, so they remain incentivized to build more superchargers all over the world. And by doing that, they create a much bigger, more diverse supercharger network, which is then an incentive for anyone to buy an EV, because they know that they can extend their range easily and for very little money. Now, if we move on to the second example of Nvidia, you can see that it's also had a fantastic year in the stock market. It's seen almost linear growth over time, which is incredible. So let's look at why this happened. So Nvidia began developing its graphics cards all the way back in the 1990s, and it first became publicly traded in 1999. But really, the stock saw a huge boom in 2017, as many of you will know if you're interested in cryptocurrency, as the price of these graphics cards was rising exponentially because of their ability to mine cryptocurrency and earn a lot more money by doing that. So we saw a little bit of a bubble there. But of course, Nvidia had to ask the question, how do we continue this growth in the longer term, and how do we move the focus away from this cryptocurrency market? And how they've done that, in my opinion, is with their graphics cards data centers. So how this works is they produce particular graphics cards which are designed to be used for high performance computing applications. So one particularly interesting use of this technology is artificial intelligence. So the key principle behind artificial intelligence is to do a lot of computations, a lot of straightforward computations in a short period of time. And graphic cards are actually perfect for this type of computation. And of course, as we know, artificial intelligence now is being used everywhere in the market. I can't really think of an application where it isn't being used. So the demand for these graphics cards and this data center solution is huge at the moment. And so much so that it's actually growing at it's now worth almost as much as the entire Nvidia gaming business, which was unthinkable a few years ago. And the actual revenue from these data centers has increased by 80% in 1 year alone. And it's been a massive contributor to the success of Nvidia and beating their earnings results for the first couple of quarters this year. So if we do all of this analysis, we find some very promising business models. Then how do we find the exact time to enter the market, the most profitable time to enter the market? This is obviously a very difficult question and something that we can never time exactly correctly. So really what we have to understand to get a good estimate is the psychology of the market, which again is particularly difficult. As in recent weeks, we've seen these exponential rises in stock prices, especially in the tech companies. We've seen price to earnings ratios that have just blown up. And for a value investor, this is obviously a bit of a problem because we want the best possible price. We want something that's below what we think is fair value if we can get it. And at the moment, everything seems to be hugely inflated. But what we can do is just understand how the fear and greed cycles of the market progress and how eventually a time will arise where we can get in on our preferred stocks. So examples of this fear and greed cycle are, of course, the COVID-19 pandemic. It's arguably the most obvious example of this. We saw a huge sell-off in March, which led to the Nasdaq taking a huge hit. But now recently, we saw Tesla and Apple stock split, which caused a huge run on both of the stocks, which is now starting to enter the next phase and take a hit again. So in terms of finding the best time to enter the market when it's like this, we have to examine this fear cycle in more detail. We have to find the time where investors are panicking about their investment. But we also have to find a point where we don't just catch a falling knife. We have to know when that rebound is about to come, or at least get close to that point. So a good way to do this is to combine our fundamental analysis with technical analysis. So if we watch out on this chart, and I can show you an example of the S&P 500 recently, just by drawing this simple line at this resistance point from all the way back in July 2017 on the weekly time frame, you can see that there's a huge resistance there which caused the stock to rebound and start this huge rally up all the way to a new all-time high. So finding something like this is brilliant if we can get the exact point. And if we'd ended a position there and left it running, we could have seen huge returns. So obviously, if you're a long-term investor, this isn't something you need to worry about too much. But nevertheless, it's useful to know, in my opinion. And does anyone have any questions about anything I've said?
So let's try to dive into this. Pablo is asking stop loss or not stop loss. What do you think about a trailing stop loss?
With a trailing stop loss, the problem, of course, is that if for some reason the market takes a bit of a dip, we can be wiped out of that trade, and then we might never get that entry point again. My preference, it tends to be to have a stop loss a bit lower so that I can account for a little bit of loss. Like if we do see something in the market that just sends it down maybe a couple of %, then we don't lose that position, we don't lose that trade. But if we do see something more significant, then we can minimize those losses.
Okay, I was having a bit of an issue with the sound there, but I think I got the point. I want to ask you the next question, which is from Vakas. What do you think about the current market crash, and what are your view on Tesla and Apple in the long term?
I think the current market crash is, I think at the moment, a correction. I don't think that we will see entering a bear market just yet. I think that we could see a sign of reversal. And today we're already seeing a sign of reversal. So if this continues for a couple of days, I think that we will start to move back upwards. In terms of Tesla and Apple, I'm remaining in my positions at least for for the foreseeable future. I think these companies will continue to grow from here, despite potentially being overvalued at the moment. We could see a correction, but I think long term, these are two great companies to be involved in.
There are some practical questions about copy trading, so maybe you can help us a bit with this. What is the minimum limit that allows you to copy? For instance, if someone wants to copy you, what is the minimum amount? Do you know that?
Yeah, the minimum amount is $200 at the moment. So the minimum copy position size, so for an individual trade inside the copy position is $1, but the minimum amount to copy someone with is $200 at the moment.
Okay, and Kira asked actually what we saw in the beginning, which is what is your name on eToro, but maybe you can put that on the screen. So those people that didn't get it, they can see. So basically, you just go to search for Kieran or go to this URL, and you can actually copy Kieran's trades one-to-one, or you can follow him on eToro if you want to. Jeremy asked, do you feel that the VXX hedges better than gold and bonds?
At the moment, I would say no, but I think in the COVID-19 crisis, in my opinion, I just guessed, well, I made an educated guess that crash would be very significant. But that was because we'd seen a huge run up in stocks for many years. You know, and that accumulation of being in that bull market for so long, I thought that as soon as something significant came along, we could easily see a 20% dip. So I thought that if that happens over a short time scale, that VXX is going to explode, and that's why I decided to buy that. But I don't think that VXX will explode in the same way. Possibly, well, it could be many years before we see something like that again. So if you ask me how to hedge right now, I would say that gold and bonds are a better option.
Okay, and then Ibrahim asked, can you copy more than one investor?
Yes, you can, and I would certainly advise that you do that because it's a great way to diversify your portfolio. There are many fantastic people on eToro to copy, so definitely do that.
Sorry, Kieran, can you hear me? Mads is asking a little, if you can elaborate a little bit on how you are screening stocks.
Well, this fundamental analysis is really the core of my my screening of stocks. So I look at the fundamental business model and how the main question I ask is, can this model withstand the test of time and changing economies? And if the answer is yes, then I look at things like the price to earnings ratio, the debt to earnings ratio, and the free cash flow, as well as other metrics. There's a lot of information that you can find on this on various websites. Guru Focus is my choice of a website. If I had to name one in particular, I would choose Guru Focus. So I think if you are looking for a good stock screening tool, I would check that out.
Okay. A few people have asked what is the recommended amount for copy trading. I mean, let's just say in your case, if people copy you, what do you recommend?
So to copy all of my trades at the moment, I believe it's $500, but I'm actually working on changing this so that with $200, all of my trades will be copied. The only problem is that I do have some smaller position sizes which won't be copied if you invest that $200, but I think 95% of my trades will be copied. So $500 is recommended, but you will see very similar results with $200 if that's what you wish to invest.
What is the software you use for technical analysis? One user asks here.
I use the eToro charts. I think they're very useful. They have all of the analysis you need, all of the studies necessary, all of the analyses. So yeah, I would check that out if you're looking for some technical analysis software.
Okay. And Henrik is asking, when is the right moment to copy you? Now the market is down temporarily, but what do you think? Can you say anything about that?
Yeah, I think now is, to be honest, the best time because we have seen this crash recently. So if you do invest now, you are getting a discounted price in these stocks. And certainly if you're a long-term investor, now is a great time to be involved because I think that we will end up seeing new all-time highs within the near future.
People have asked about leveraged trading. Is that something that you're doing yourself in any of these trades?
At the moment, no. I do open most of my positions just with the standards, buying the underlying asset rather than a leveraged CFD. I prefer this way because then we can hold for a longer period of time. We don't have to worry about fees, and we don't have to worry about if a large drawdown comes along for any reason, we don't have to liquidate that position. So for me, buying the underlying asset is the way to go. But there are a few occasions where leverage could be useful. For example, if you are using a hedge against your long-term portfolio, then you might want to enter a leveraged position on maybe one of the big indices in the US. So there are occasions where I would use leverage, but it's quite rare at the moment.
Okay. Maris is asking, which indicators are you using?
In terms of technical analysis?
Yeah, I guess it's technical analysis.
Well, I don't use a huge amount of indicators, to be honest. It's just tracking those resistance points on the weekly time frame because my only real reason for using technical analysis is to find that best entry point for a long-term position. So I'm not day trading, for example, so I don't need to worry about, picking the best entry point to a fraction of a percent, for example, which many day traders do to maximize their profit. If I'm out by a little bit, I don't worry too much about that. It's just to get that as close to that best entry point as I can get.
Okay. Henrik is asking, is eToro completely free of charge? Can you sign up and copy you without further costs?
Well, in a way, yes. How eToro make their money is from spread fees on trades. So when you open the trades, it'll be, I think, a fraction of a percent down to start with, and that's eToro. They sort of get a little bit of margin from that, and that's their profit. But in terms of what you see, you don't have to pay commission on any profits you make. You don't have to pay popular investors to copy them. It's completely free of charge. So especially if you're a long-term investor, you might have to pay maybe 0.1% of a spread fee, but really in the long term, that won't affect you at all.
Alfredo is asking, how do you actually build your portfolio in terms of industries and diversification?
So my portfolio is quite technology heavy at the moment because that is my area of expertise. But I've been investigating some other industries. So recently I entered some airline stocks because I think that they are about to rebound because of these new tests, these COVID-19 tests, which could be done in maybe as a smaller time frame as 5 minutes, for example. So I think now is quite a good time to get involved in airlines. So that's something I'm researching at the moment. But my plan for the future is to branch out into several other areas, as I do think that is one area where my portfolio maybe could be improved, because it is, as I say, quite heavy on the technology stocks.
Okay, a few people are asking to your time horizon. How long do you usually hold your position opens, and what is long term for you when you speak about long term?
Well, I mean, for a lot of my positions, I don't have any intention of selling them pretty much until I have to, because I think that they will just continue to grow. And these are the stocks that I actively pick out. But that's really down to personal preference. I mean, if you're a long-term investor, you can take that money out for a profit whenever you want, but you do want to have stocks in your portfolio that you could just leave there until whenever you want, really, and that's my aim. There are sometimes trades that I will close if it looks like we could see a market crash. Like if I enter a shorter term trade, like a swing trade, for example, then I might hold the position for maybe a week. Sometimes less than that. It just depends on market conditions, really. But my fundamental positions in my portfolio will just stay there for as long as I can see that company making money.
Okay, a few people asking about NIO, NIO. I'm not sure if you are familiar with them now that you have invested in Tesla. Is that something that you have any point of view on?
I've done a little bit of research. Probably not enough to make an educated decision at the moment, but it does look like an interesting company. My only worry is that a lot of money is being poured into it. It could potentially be due for a significant correction, and this is what we're seeing with Tesla at the moment. So it is a bit of a risk from my point of view, but I do think I need to do more research into it, as it does look interesting from an investing point of view.
Okay, and also a lot of people are asking, is this now the moment to buy Tesla? Is that something that you have any point of view on?
I did just open the position yesterday, but I closed it on market open today, so it's just a bit of a swing trade. To be honest, I have been thinking about this recently, and I'm not entirely sure. I think that we could see a little bit more of a drop, but in terms of my position in Tesla, I'm not closing it at the moment, because I think that at any moment it could take off. This little dip might come to an end, at least temporarily, and we could see a new all-time high. So I think if you're a long-term investor, then you could go for it. You might see a short-term dip, but that might not affect you. Whereas if you're more of a short-term investor, then maybe I would leave it for a little bit until we get more of an indication of which direction we're heading in short term.
Okay. We're really being flooded with questions here, so I'm trying to get a hold of on this, but of course I cannot read all of the questions. I think we will take maybe 3 or 4 more and then round it for today. A lot of people are asking about, do you have some recommendation for stocks that are good buys right now?
It's a difficult question at the moment. A couple of weeks ago, I would have said NTNX, because I think that it was undervalued at the time, but they had a brilliant earnings day, so it's now gone up about 20% since then. So it could be a bit risky at the moment. Microsoft is potentially a good option. They've seen quite a dip recently, so it could be a good buying opportunity. Other than that, I think Nvidia is, from my point of view, one of the stocks that could continue to grow way higher than it is at the moment, because of the model I described with the data centers and the graphics processing. I think that there's a lot of room for growth there, even at these prices. So if I had to choose one stock, I would say Nvidia at the moment.
Okay. Now, this is actually a big question, but I'll put it to you anyway. Caritas is asking, what's your thoughts on cryptos, and do you have any that you would recommend? Any cryptocurrencies?
Yeah, I have a small position in Bitcoin and Ethereum. I think that the future prospect for cryptocurrency is very promising. The fundamental model behind it is fascinating. I think it's almost a natural evolution for us as we continue in this digital age. So, my opinion, long-term potential, fantastic. The problem I have is the risk in the short term. I mean, we could argue that Bitcoin at the moment is overvalued for how much it's actually used in the real world. It's more of a speculation at the moment, but if you want to buy now and hold for, many years, then it's a fantastic investment in my opinion, and that's why I do hold some myself.
Okay. Then the second last question: Do you ever go short in the market or short a stock?
I don't short individual stocks because I think the risk of that is very high. What I do occasionally is short major US index. So I've shorted the Nasdaq a couple of times and the S&P 500, but that's usually as a hedge against my long-term portfolio, because it's usually a way of just minimizing the damage if we do see a crash such as the COVID-19 crash.
Okay. Mes is asking, what fundamentals do you actually look at? Is it the PE, or in that case, do you do a peer analysis?
Yeah, so it's as I was saying in this talk, it's mainly the fundamental business model that's important to me, and the PE ratio is something that I look at after, but to me it doesn't hold too much weight, especially if I want to get in that stock early. It could be in debt, even the company, but if that business model is there, then to me it's a good investment. So that's really what I'm bothered about, but I do take into account the PE ratio, the free cash flow, but on a much lower, I don't give as much weight to those numbers as I do to the core business model.
Okay, Kieran, I think, we could continue all night here because I'm just continuing to get questions, but I think you have answered so many questions today, and you did extremely well, I would say, because those were questions in all kind of directions, and I have to say we also have many questions about very specific stocks, and I think that's maybe a little bit too much to go for that. But thank you very much for being with us tonight. I think it was extremely inspiring and inspiring for everyone in here to see how well you have performed during the last period and even during the COVID crisis. I think it's really inspiring for all of us that are trading ourselves on eToro. So thank you very much for this, and I hope that everyone had an inspiring evening here. And for those that didn't see the whole thing, there will be a recording that we will send out tomorrow on email, and then you will be able to see all the details. So thank you very much, Kieran, for being here tonight.
Thank
you. And thank you to all of you. Thanks for coming here tonight to all of you, and see you again hopefully on other webinars on Invested DKs. We're doing webinars in Danish and in English, and hopefully we'll be back with the other webinars that will be of your interest. Thank you for tonight.
Thank you.